Good morning, everyone. Welcome to the BGL Online Summit. This is a virtual event and we showcase some of our RegTech 2026 sponsors. If you don't know who I am Lily Williams. I'm the Partnerships Manager at BGL, and I'll be your host today. So, this is our third session as part of the BGL Online Summit, and it's a series of webinars that will run across 3 weeks. Today's session, we have Beyond Compliance, using AI to become the trusted advisor your clients actually need. And it's going to be co-hosted by the Gap. So I'm pleased to introduce today's presenter. We've got Mark Jenkins. He's the co-founder and CEO at the Gap, presenting today. Before we do get started, we've got a few housekeeping notes. The session will be recorded. If you need to leave or jump off early, or if you miss anything, at the end you'll receive a link so you can rewatch this webinar. And we also post the webinars to our YouTube channel on a playlist. There'll be one there called the Online Summit 2026. We have the Q&A function available. So if you can see the Q&A in your Zoom toolbar, this is where you can pop in any questions and we'll go through a Q&A session towards the end of the presentation. So Mark, I'll hand it over to you to kick things off.
Thanks very much, Lily, and welcome everybody. I know how busy you all are, and I really appreciate you giving us some of your time to hear from me. For those of you who don't know my background, I am a chartered accountant, have been for over 35 years now, had my own firm for nearly 20 years, and about 50% of my revenue came from advisory services. I sold that firm back in 2014 and formed the Gap around that time as well. And since then, we've been building out a platform to help other accounting firms market, sell, and deliver advisory. So that's what we're all about. Today, I'm wanting to talk to you about AI and using AI to become the trusted advisor. We've certainly seen an explosion in AI, and we've had a massive investment in AI ourselves in our own firm. And I'm sure many of you are using AI on a regular basis. And this is all about how we harness the AI and enhance that human experience. So I'll start off with a bit of an industry update. I'm going to then pose some questions, if you like, about AI. Is it a cost saving or an opportunity? I'll then talk about the real power of meetings. And then I'll give you a brief showcase of the Gap. Don't worry, I'm not going to give you a death by PowerPoint presentation about the Gap. I'm here to help you to learn some new things, maybe challenge your thinking, and to help give you some next steps that you can implement straight away off the back of this event. As Lily mentioned, we've got the Q&A, so please feel free to ask any questions in the Q&A. I've got it open on a second screen here, and Lily's going to monitor that as well. So she may interrupt me for questions, or I may deal with questions as we go. So don't be afraid to ask those questions in that Q&A. All right, so a bit of an industry update just to kick us all off. So there's definitely an upsurge in private equity interest. We're seeing that largely in the UK over the last 5 years. And if we look at some stats out of the US, back in 2020, I think that there were only 30 firms in 2020 that had an investment, some sort of private equity interest in them. And that number's now over half by 2025. So 30 firms to over half, that's a massive explosion. We're also seeing that flowing through into Australia and New Zealand, private equity interest in New Zealand most recently, but also a lot of growth in consolidation and acquisition of firms. So that leads me into the next point here. The market to sell accounting firms is the hottest it's been for a long time in Australia and New Zealand, as I understand it. And so what I'm seeing there is more buyers than sellers, and we all know about supply and demand. And so that's pushing the prices up. And I'm just not sure how long this is going to last for, but we know we have an aging base of practitioners and firms who have made the modernization transformation journey can acquire a base of fees, and all of the GP from that goes to the bottom line. So some really good opportunities for firms in expansion mode, and also for those who may be considering getting closer to the finish line. It's definitely a good time to be thinking about what are your options there. AI adoption rates are very, very high. It's when we start to drill down and look at what people are using AI for, that perhaps we're not seeing quite the benefits that everyone's been promising. We're not seeing massive time savings. We are seeing automation really coming through strongly in the compliance space, which is great. Really encourage that. And what we are often seeing is firms with no AI strategy, or maybe there's a policy on it, but not everybody knows it. And we've got people using AI in different ways. And then there are some concerns around data protection and around authenticity when messages are sent to clients. Um, with that robotic process automation, or RPA as we often refer to it as, there's the threshold's getting higher and higher in terms of how much of that work is being automated. If we look at the annual accounting and compliance process, a lot of the record gathering piece is being automated. A lot of the end piece, the finalization, is being completed by AI now, or by automation. What we're not seeing as much of, but there are firms who are doing this. We're seeing less work, sorry, in that space of the actual preparation of the financial statements. But I expect that to change. I know of a couple of products that have gone a long way down that track, but they're early adopters. They're front of the wave, but it's definitely coming. With that, I expect margins will be squeezed. They are not being squeezed yet. I haven't seen any evidence of that. I haven't seen people coming out saying, we'll do you a job for half the price. I expect that will happen, and I expect that it's going to be important to have a clear line of differentiation there. This trusted advisor status is definitely under threat unless we free up capacity, and I'm going to give you a graphic to show you what I mean by that. So in terms of a poll that I wanted to launch at this point here, I just wanted to, Lily, if you wouldn't mind launching the poll at this point here. So compared to this time last year, is your firm meeting with clients more, less, or about the same as last year? I'll just give you a bit of time there. We like to have 100% participation as one of our housekeeping rules of the game. So I'm going to give you just a little bit longer we've got about half of you have responded so far. So it's a pretty easy question. Great. Just give that a couple more seconds for people to just put their responses in. And I think we'll share the results now. Thanks, Lily. That would be great. So we can see here around about 75% of you saying you're meeting about the same as last year. What I'm seeing is people meeting less. So those of you who are meeting more, well done. This is what we need to be doing. This is the human connection. People who are meeting less, you're in good company. This is what I'm seeing across New Zealand, Australia, and the UK. And I'm not saying that's a great thing. And I know that there are reasons why people are meeting less with the accountant. But what I'm really worried about is if you're meeting with your clients less, then there's a risk that your relationship with your clients becomes transactional. And if it's transactional, the relationship then becomes based on price. So let me just show that in a different way. So this is some content written by Nick Tune, Core Domain Patterns. It's designed for software companies, but I think it's completely relevant for accounting firms as well. So if we look at the degree of differentiation, how different is your offering to your competition? If you're at this end over here, a high level of differentiation, not many people are offering that service to your clients. And then over here, it's how complex you are on the y-axis here. And so in the past, we had this decisive core where you had that trusted advisor status for the core compliance work. And my concern is that if you are meeting with your clients about the same or less than you have in the past, or you don't have as many touch points with your clients, then as automation and technology makes it possible for clients to do more themselves, there's going to be a shift down into the supporting or generic domain. if I give another example of that, cloud-based accounting solutions, those used to be up in the core domain, and they're very much now in the generic domain. Most people are using a cloud-based solution, and with that, some of you will argue that the price goes up, but we have definitely seen a commoditization, or it's become generic, that service. And that's my concern about accountancy, the core compliance work. If we don't give a level of differentiation, and my belief is that that differentiation is around the human connection and the meetings, we run the risk of a race to the bottom down on this lower left-hand side here. So what do we need to do? We need to embrace AI and technology and embrace that human connection. And so having an AI-powered focus on value add versus a transactional price-driven service. This is really important. When we're up here in the core domain, it's hard for other people to copy what we're doing because we've got what we know about the client, our clients, and the relationships we have with them. Not only is it a little bit hard for them to change accountants, but it's also that they know, like, and trust you. So when they might be able to do something with AI, they're still going to want to have it checked by somebody else, and you're going to be that trusted advisor. So meeting with them is going to be really important. And if we think about what I'm also seeing with accounting firms right now, this now, where, how mindset's a really neat mindset for you to share with your clients as well. Where are they now? And we talk about their financial and tax position, the hours that they're working, the role that they have. Where would they like to be in terms of the role, the earnings, the cash flow, the profit, and then the how is the service that you provide to them. In this case, this is what I'm seeing in the now. I'm seeing a lot of ad hoc reactive advisory offering. I'm seeing an inconsistent client experience depending on who's in the room. I'm seeing many people talking about their team having a lack of confidence or structure to deliver advisory services. And the partners are way too busy. They've just got so much on their plates and they don't have the capacity to coach or grow the business. And there's a lot of value being given away, a lack of sort of commercial skills and write-offs eating the margin. Then we want to think about where would we like to be given what's changing with robotic process automation and with AI. We want to make sure that we have this really consistent, high-quality service delivered by the whole team. And when I say the whole team, I mean the whole team who want to do this. We're never going to get everybody delivering advisory, but what I'm thinking over time is that there's almost three cohorts. One cohort who will probably never change. They've got their eye on the finish line, and that's just fine. Then we've got another cohort who are kind of sitting on the fence, and they might lean towards the first cohort I mentioned, or they might lean towards the third cohort. And the third cohort are the ones who love AI, they love technology, they want growth, they want development. They're scarce, there aren't many of them, but they are typically younger, they want to be trained, and they want to develop their skills. And the risk is that if we don't give that cohort what they want and need, they'll be influenced by either of the other two cohorts, or they'll vote with their feet. And we know how scarce these people are. So we want to make sure that the clients also see their accountant as a strategic partner. And I'm going to talk about what do I mean by what's the value of a strategic partnership. And we want an increased average fee per client and stronger retention because we're likely to lose some of those smaller transactional-based relationships because those steps will be automated. And we want a future-proof revenue stream. So how do we do this? Actually, I was just sharing this mindset with a firm in New Zealand yesterday, and I said they'd sent me some pre-work for a meeting, and I read out this, and they said, "Have you been listening? Have you been in my firm? Do you know what's going on inside my firm?" So I know that this actually resonates. So how do we get from the current situation to the future state? It's all about implementing a structured AI-backed meeting system across the firm. We want to use the Gap or whatever product you choose. You need to standardize your advisory delivery, at every level. So that's not just meetings, but it's the training and the development that goes with it. We want to build that commercial capability of that third cohort. I'll call them the next generation of leaders in the business. We want to bring up their skills. We want to give them the scaffolding to help them to grow as the firm grows as well. And we need to free up partner time by automating admin and reducing tag teaming. Tag teaming is when you have a partner and a senior team member in the meeting at the same time. There's an element of that that's needed, but there's a lot that's not needed. So the two biggest problems that we've seen in talking to accounting firms across the world, owners are time poor, and there's a lack of a scalable way to train the team. So we're seeing firm owners who they've just got so much compliance demand, they get surprise Mondays, they've got an inbox that's totally full, they've got multiple other channels that are full as well. So while they know they need to do the advisory transformation, it's getting deprioritized. And the partners are the bottleneck there, where they're building their skills and experience on the job, and they don't have time to train the team. And the admin for meetings is often not the best. So a couple of examples of that. The client doesn't particularly get clarity from the meeting about what was discussed, what the action points are, and the team members who are then to implement some of the work don't get clarity either. And so there's just that lack of context or a data lake in the future to draw from. We also see on this other side the lack of a scalable way to train. So we do have advisory skills, but they're typically concentrated in a couple of team members. The junior and mid-level team members are missing that commercial confidence to lead the client conversation. So they might be in that third cohort or that middle cohort, but they're not being given the opportunity and they don't have the confidence. They need some scaffolding around them to take that step. And traditional training is expensive, slow, and it doesn't stick. We get a lot of technical training, or we get maybe some soft skills training, but it's not linked to the actual service that the people are providing on a day-to-day basis. And partners simply can't shadow every meeting, so the coaching is really inconsistent. So if we look at AI, is it a cost saving or an opportunity? Great quote here from Richard Baldwin from the 2023 World Economic Forum Growth Summit. AI is not going to take your job. It's somebody using AI that will take your job. And so let's just have a look at this. But before I do, I'm going to launch another poll. Thanks, Lily. If you can just drop the second poll in for everyone. How long do you think it'll be before AI or robotic process automation can automate 75% plus of the annual accounts compliance process?
And again, Mark, as you know, the housekeeping rule is 100%.
That's great. We're sitting at about 51% participated so far, so give you a little bit more time to respond to this. All right, looks like we're up to about 62%. We might share the results now. Thank you. So very interesting to see that 10% of you are saying that we're already there now. That's my personal view. I've actually seen a provider that has done 100%. There was a Friday afternoon, I was having lunch with the person, and they were kind of sweating a little bit and a bit stressed and kept checking their phone. I said, what's going on? They said, oh, and then it was a sort of a fist pump, and they said, we've just processed 60 sets of annual financial statements using AI from beginning. We're using automation from beginning to end. So we are already there, but the interesting point is that that's not fully ready for rollout. That's one accounting firm that has managed to do that. So the capability is there. The conventional wisdom, I think there was a report by Carbon done recently that AI is around about 40% of the annual accounting compliance is able to be automated now. And the firms I'm speaking to range in their thinking about what we're saying here. I don't see many people saying it's going to take longer than 2 years. But I certainly think it's going to be within the next 12 months. Automate these steps. So If we look at the process to work our way through a annual account set of annual accounts, so you'll have your own number of steps in here. We used to have a 13 or 12 step. We didn't want to have 13; it'd be bad luck. 12 step annual accounting process, but basically it follows this sort of a process. Then we want to meet with the clients because that's the opportunity to talk about the financial and tax position, the value you've already provided, and the opportunities for value add. So I'd love you just to take note of that and think when you're meeting with your clients and when your team members are meeting with clients, are they covering off those 3 points of value? Talking about the financial and tax position and the value provided, that's the rear view look, and the forward look, what are the opportunities for value add? Then we e-file, e-sign and e-file. Of course, these purple steps can be automated, and based on what you've just said, if we say only 40% can be automated, even if it's only 20% now, what's 20% of your revenue when that gets automated? How much will you lose of your revenue? If we get to a point where 100% is automated, I want you to think about that calculation and think about what will you be selling when those steps are automated if you're not meeting with your clients. You'll probably be selling the checking of that process, but it's not going to be the same revenue. So we want to make sure that we are providing really good value so clients are prepared to pay the same price or not squeeze the margin on the annual accounting work because the value is so high in the meeting. And if we don't have that meeting, we don't get the opportunity for the next meeting, which is the value add piece. And the traditional model of the pyramid with one partner at the top and maybe 5 or 6 team members underneath, I think there's an opportunity to flip that pyramid up the other way with more client-facing team members and automation and technology doing the bulk of those purple steps. All right, so here's an example of, and I call this the IKEA moment for the accounting industry. It's a great example of what IKEA had done. So they had 8,500 customer services team members. So these are people that are answering phones, queries, that sort of thing. So what happened with them is that they put a bot in and discovered that 47% of those questions could be answered by the bot. And so then they've got a decision to make. Imagine this 47% is your 47% of your compliance work's now being automated. You then have a decision to make. What do you do with the 8,500 people? So do you drop that 8.5? Do you multiply it by 47%? Or do you do something different? What IKEA did was that they had got AI to have a look at what were the 53% of the questions that they couldn't answer. And what they found out was that those questions were customized design that was needed. So they retrained, I don't know how many of these 8,500 people, but they retrained them as interior design consultants using AI. And as a result of that, they generated 1.4 billion euros more revenue. So a great opportunity to think about AI as an opportunity, not a vulnerability, an opportunity to retrain, an opportunity to do things differently. I just see somebody's made a comment here, rare to have a physical meeting in 2026, all email and phone. Yeah, so my challenge is to find a way to engage with clients, whether it's online or make it that they want to come and meet you. We need to show them the value. So thanks for the comment there. So if we think about the accounting industry's IKEA moment, what we have here, we could be doing the same. What IKEA did, we could be doing the same with annual accounting and compliance. So we could be looking at, in the past, financial statements and tax returns prepared manually, billable hours time to time-consuming compliance, and the client relationship was transactional or price sensitive. And we've got this risk of the 60 to 80% being automated, and there's going to be a risk that we're going to be competing on price. So what's the opportunity? It's not a vulnerability, it's an opportunity to really enhance that AI and the automation, to redirect the capacity to strategic advisory, become the trusted partner, not a transactional processor, and have a client relationship that's value-based and insight-driven. And that human connection and expertise becomes your competitive edge. That's how you hold that core domain. but you can't scale this to your team in the same way that you're doing that yourselves. We don't want to blow you all apart if you're owners of the firms. We know that you're already busy, so we've got to build that capacity into the team. And so we don't want AI to be used to cut costs. They'll be the ones who used AI to deepen client relationships. That's what we want you to do, move from a price conversation to a value conversation. And I'm just going to share some stats on this here. But before I do that, one more poll. We've got two more polls to go, so I'll just launch the next poll. Thanks, Lily. So what percentage of your firm's clients would you say see your firm as a strategic partner, not just a compliance provider? I'll just give you a little bit more time. We're going about 50% of you have answered so far. So what percentage of your firm's clients would you say see your firm as a strategic partner, not just a compliance provider? Okay, great. Let's share the results there. Thanks, Lily. So what's really interesting to see here is it's great to see that some of you have got more than 75% see you as a strategic partner. That's fantastic. Maybe your niche or boutique type firms. There's some quite interesting stats here. So many of you, 18, so about 36% of you are saying less than 25% are seeing you as that strategic partner. All right, so I'll just remember that 6% in that top category, which is great. All right, so just stop that on here. So there's some work that's been done by Intuit and the Small Business Navigator report came out in 2025, where they said 1 in 3 people consider that their relationship with their accountant is transactional. So these are small, medium-sized business clients surveyed over 6 continents. There were I think there were over 500 small and medium-sized clients, business clients that were surveyed here. And 1 in 3 said they thought the relationship was transactional. What's really interesting is that overall, everybody, only 44% of people thought they got great value for money. But there were only 15% saw their relationship with their accountant as a strategic partner. So we had 6% of you said that you thought you had more than 75%, but the data here is suggesting something a little bit different. So if you've got that strategic partnership relationship with your clients, that's fantastic, because those people, 84% of the people that considered they had a strategic partnership, felt that they got great value for money. But here's the kicker: they spend on average 3 times more. So yeah, and a great point there, Peter. I guess we should include a feedback survey to clients to ask whether the accountant is a strategic partner. It's not what I think, it's what they think. Absolutely. Thanks for the vulnerability there. Really appreciate that comment. So this was a bit of a kind of a scary stat, but also a really great stat, because it proves that if you move into that core domain that I was talking about before, of that strategic partnership, then your clients will spend more and they'll consider they get great value. Okay, so got a question I can see here. What's the most commonly used AI tool amongst firms who are using it to automate their compliance work? So I'm seeing all sorts of different solutions there. There's products like in New Zealand and Australia, we have a product called Abby, A-B-B-Y. There's another product called Frankie that automates the process. There's a lot of firms who are building AI agents themselves to do this work, and there are more and more popping up all the time. So I'm not seeing one that's the most common. What I'm seeing is some firms wanting to do this, and other firms saying we'd rather buy it off the shelf. And that's probably the decision to make: is do you buy off the shelf so that you don't have to keep making the investment, or do you build it yourself? And that's up to you. But I'd say personally, I was trained as an accountant and a strategic advisor. I'm not a software engineer, and so I would choose to buy off the shelf. That would be my preference. Great question. All right, so how do we start with better meetings then? If we know that meetings is the point of difference, how do we make sure that our meetings drive client engagement, deliver real value to the client and a commitment to action? How do we make sure they maintain focus, clarity, and alignment with our goals? And how do we make sure they enhance our brand and our strategy? So when we look at the way we run our meetings, I want you to be thinking about everybody who potentially could be a client-facing team member, not just the partners, because you'll be doing it your own way. You'll have your own art, your own style, the way you do this. This is about how we scale this up across the team as the compliance work is automated and the team are going, what do I do now? What's the opportunity for me now? And so if I talk about what the Gap does and how the Gap solves some of these problems, we talk about what do you need to do before each meeting. We recommend you use pre-work or discovery questions because then if you haven't got much confidence with how to run a meeting, if you can see the questions the client's asking you prior to the meeting, you can prepare for that meeting really well. And you can use AI to give you the content that you should be talking about. Every meeting needs to have clear objectives. If we're talking about an annual accounts review meeting, it's those three value points I talked about. One being the financial and tax position, two being the value that we've already provided, and three being the potential future value add. Those objectives are really, really important. Many of you will be doing number one, but perhaps not articulating the value you've already provided and maybe not having enough forward-facing time. We've got to make sure we have an agenda. We've got to have client-driven talking points. If we get the clients talking about their problems and challenges, we can offer them solutions to those problems in the form of a service that's linking compliance conversations into value-add conversations. And we want AI-supported outputs. We want to save 20 minutes every meeting and still have very good quality output off the back of the meeting. And we want to bam book a meeting from a meeting. So we've got that constant linkage going on there. All right, and how do we structure the meetings? I talked about that quote before, you're not going to lose your job to AI. You're going to lose your job to somebody who's using AI to do their job. So that's how we do this at the Gap. Firms are building this content themselves as well, but I ask you that question again. Do you want to be a software engineer, or do you want to stick to what you're really good at and which is the accounting and tax work and the client relationships piece? We want to have assistance to deliver with AI as well. We want to have post-meeting AI support, and we want to have coaching feedback. If we're not going to be tag teaming the team members, we want some process to check in how well did they do. On a scorecard here, this is the coaching scorecard, and I'll show you one of those in a minute. What did they do well? What didn't they do so well? What value did they leave on the table? And what are three things they should do differently next time? And linking that to the training and development that they need. And making sure we have art and science to the way we do this. So the way the Gap works beforehand, before the meeting, we have the strategist, reads all the pre-work, all the previous correspondence you've had with that client from that data lake, and it surfaces things that you need to be talking to the client about. During the meeting, you want a note taker. We call it a scribe, in person, online, doesn't matter. And that's capturing what's being said in the meeting so you can focus on the client conversation. You've got an agenda that you're following, but you don't have to worry about note taking. If you are note taking as well, you can take those notes and blend with the producer after the meeting, blend the transcript with the notes that you made and the pre-work and the agenda and the previous session records from that client to produce a really nice set of minutes that looks like a professional set of minutes written by an accountant. And then we want coach to help you after every meeting. And I've found it very confronting, some of the coaching feedback I've got from Ned, our non-executive director, who you can see on the right-hand side here. And I've learned so much about how to run better meetings. And then we're building out a guide that'll be contextual support during the meeting, pointing you to the right sort of content. So I'm just going to briefly jump into the Gap here and just show you what I mean by the meeting system. So here's a annual accounts review meeting that's been done. We've got the client name, we've got the agenda, these are the notes that have been taken during the meeting. We've got a transcript that's been running in the meeting, whether it was in person or online, it doesn't matter. We've got the tool for that. And we've got the pre-work responses in here from the two owners of this firm down here, their individual responses to the questions, what's standing out for you in your annual accounts? Where do you think your business could perform better? What can we do to improve our service? You can edit these questions. Some people take that question out. They don't want that if they're delivering annual accounts very late. Do you have any questions that about your financial or your tax position? You know, give yourself a rating out of 5, how you've gone on your financial goals, lifestyle type questions, that sort of thing. So then when we come up to the top here, we can see an AI summary of that as well. So we've got all the preparation we need. We also, I'll just move this out of the way. We also have if you like, the data lake, the context of previous meetings that we've had. So the AI will be looking at what we've talked about before. So if you have some meeting note takers at the moment, they don't build on the context that you have. And we're not saying we would be the one source of truth. The data could be stored in FYI if you're using that product. It doesn't really matter. So once we get to this point here, we've made some notes during the meeting. We've had guidance during the meeting with delivery notes. That's the scaffolding for the team. And this is the same for any different kind of meeting, all the different kinds of meetings that you can imagine, and you can customize this. Then we can quickly pull together the minutes of that meeting. That's a branded experience. Your logo will be on here, and it saves you having to take the transcript, put it from another note taker, put it into AI yourself. It's all within our platform. It takes about 30 seconds. Summary, what was discussed, beautifully set out, key actions, who needs to do what by when, and the next steps. And then also a clear coaching report and a scorecard. What did you do well? Really specific. At that point in the conversation, you said this, maybe you should have said that. What to improve? What opportunity did you leave on the table? And we've had members who've gone back to clients after this and sold the service that was missed out on, and they use the coach. And then what would you do differently next time? So there's a lot more to the gap than just this. We have a value gap calculator, which, in real time, you can show people how they can improve their debtor days, all that sort of thing. And you can look at how they might do that, ideas about measuring results and so on. All sorts of different things here. Generate a nice little analysis with your branding on here. So this is a soft sales tool. And we also have the Gap Academy as well to help. But the purpose of this call was not really a sales pitch, but the Gap Academy has 20 years of deep subject matter expertise all in there. It's by accountants for accountants. It's ring fenced. It's not going to be AI slop. It's coming in from the context that we've had from many years of experience and other coaches providing input in here. So a massive amount of resource that's sitting in here, all verifiable CPD, courses that you can do, mindsets, previous recordings, coaches to refer to for help, lots and lots of content in there. All right, so I'll jump back here. We'll go to questions a little bit later on. I just want to move on and just remind you of this art versus science conversation. So many of you who are partners in a firm, you'll have your own art. You'll be very good at what you do. Your dad jokes, if you're a male, will be probably better than mine, and that just comes with experience. But if you're tag teaming with somebody else, they are only going to learn your art. What they need is the science. They need the system and the process, the scaffolding, the structure to help them to learn the skills. And that's what the Gap does, and that's what we're all about, helping you to build that scaffolding. So next steps from here, what we want to be doing is thinking about this wonderful achiever matrix by Stephen Covey. We want to be stopping the things that are manual meeting minutes, informal ad hoc advisory conversations. We want to stop having partner time spent shadowing and debriefing junior team members meeting by meeting. We want to delegate routine tasks. We want to use AI as much as we can. And up here, we want to automate as much of these steps as we possibly can so that we can focus on this building that strategic partnership with our clients and build trust that AI can surface but never replace. Grow the team's commercial capability through consistent advisory and position your firm for the future. And part of that, how do we build capability? We want to make sure this is a flywheel that's going around all the time. So we want insights and context for the next stage. So that's the looking at that data lake, information about the client. We want to have good quality meetings, and we want our clients to want to come to meetings because of the value that you're providing. We want to capture insights, actions, and opportunities in that meeting. And then we want feedback of how well we did in those meetings, so that we can then go into things like the Gap Academy to learn our skills, to improve, and to keep that flywheel going. If you want to work out what this is worth to you, we've got a calculator here which says, based on the number of team members that you have, how many meetings are being held per week, what's the average charge rate, how much time will we save for meeting. This is the conventional wisdom that AI should save you 20 minutes per meeting. How many meetings can we avoid the tag teaming in over here? And what are the upsell opportunities? What's the average sale value? And so on. Now, the Gap subscription cost isn't $995. That's if you have 10 users. It's as low as $175. So you can work out the ROI here, and you can see it's massive. What I want you to think about is that first diagram, the percentage of your revenue that could be automated. That's the revenue that's at risk. What would you invest in as a percentage of that total revenue being lost? How much would you invest in preserving that revenue? That's thinking about an investment in the capability building of the team so that you can survive from here. So next steps, what are your most important actions? I've got a last poll to do here. Lily, if you wouldn't mind just dropping that poll in here. You can answer as many of these questions as you like. You've given us 45 minutes of your time, and I really want to make sure that you get the most value from this as you possibly can. So don't be shy. Think about what are the actions that you're going to take. Really important to make sure that we think about our team. How do we build the advisory skills across the team? And if you want to find out more about the Gap, we'd be very happy to do that. We're not going to do a hard sell on you. If it's not right for you, you'll at least get value out of the conversation with us. We're certainly here to help if people are interested. Let's give a little bit more time here for people to answer the questions that are on here. We very much want to help firms on this transformation journey, and we really want to make sure that you can see what the opportunities are out there, and you've got a choice to make of how you want to do it. For those of you who had the strategic partner, some of you had more than 75% of your clients thinking you're a strategic partner. I'd really encourage you to think about setting a target. For those of you who are lower than that, setting a target for the percentage of clients to move from transactional to strategic. We also will be present at the RegTech event. So really happy to, you'll be able to meet Jenny many of you will know Jenny, so you'll get an opportunity. That would be where you could find out more about the Gap as well. Okay, we might move on from there to Q&A. Sorry, we don't necessarily need to share the results there because that was really just individuals, what people were going to be doing. So we can leave that poll going if we need to, but happy to move to questions now if any of you have questions. Um,
Yeah,
and
we
I can.
do have the Q&A open, so any questions, pop them in.